Hey Super Savers, today's video is another one that many of you have asked for, how to buy treasury bills, notes, and bonds. An especially timely topic given the recent rise in interest rates. Here's what we'll cover today. The top 5 reasons for buying treasuries. How the auction process works for new issue T-bills, bonds, and notes. Basically, how they're sold. How to buy new issue T-bills on Fidelity and why this is my preferred choice. If you're more interested in treasury notes and bonds than T-bills, no worries. The process for buying treasury notes and bonds is similar to the process for buying T-bills. And likewise, no worries if your brokerage or retirement account is with the likes of Vanguard, Schwab, or E-Trade. Their process is fairly similar to that of Fidelity's as well. And no, I don't get any commissions or payments from Fidelity for doing this. I've just been with them since my late teens, so not too long ago. On a serious note, I've tested out a number of investing platforms over the years, and I'm still a genuine Fidelity fan. That's where most of our accounts are. So, in this video, I'll also cover how to buy new T-bills from TreasuryDirect and when this might be a better option. Plus, how many T-bills we have in our personal portfolio and why. Do note that today's step-by-step tutorials focus on new issue T-bills, notes, and bonds. New batches of Treasury securities that the US government sells directly to investors. I'm not talking about T-bills, notes, and bonds that are already floating around in the secondary market. If this is something that you're interested in, then drop me a comment below and we'll add it to our list of video topics. As usual, I've included timestamps for those of you who are just interested in the tutorial sections. Reason 1, they're typically paying better rates than most CDs right now. According to Investopedia.com, as of the first week of September 2022, the top national bank rate and the top national credit union rate for a 3-month CD is 2.1% and 1.85% respectively. And the top rate for a 3-month jumbo CD, that's also hovering around only 2% according to Investopedia. Jumbo CDs typically require an initial deposit of at least $100,000. Compare those CD rates to the rate on a newly issued 13-week Treasury bill, also issued the first week of September. The investment rate on that was 2.941%. The 13-week Treasury bill is the winner in this case, especially when you account for taxes. The interest earned on T-bills, notes, and bonds, like with I-bonds and TIPS, is subject to federal income taxes, but not state and local income taxes, whereas the interest earned on CDs is fully taxable. It's no wonder so many of you are interested in buying T-bills, notes, and bonds right now. Reason 2 for buying T-bills, notes, and bonds. They're low risk. Treasury securities are backed by the full faith and credit of the US government, meaning that there's practically no credit risk. Practically no risk that the government will default and not pay you your principal back at maturity. Unless our country goes bankrupt, which, as I always say, if this happens, we'll all have much bigger issues. Reason 3 for buying T-bills, notes, and bonds. They're liquid. If you own these treasury securities via the likes of Fidelity, Vanguard, Schwab, or E-Trade, you can sell them by simply clicking the sell button in your investment account. If you hold them via TreasuryDirect, there is a 45-day minimum holding period, and the process is a bit more complicated, but nonetheless, it's possible to sell them in the secondary market once you've jumped through a few hoops. I'll dive a bit deeper into that later on in the video. Just keep in mind that this liquidity, this option of selling in the secondary market, may come at a price. When you sell in the secondary market, you get whatever price the market is willing to pay for your T-bills, bonds, or notes. And what the market will be willing to pay may be less than what you originally invested, depending on interest rates, inflation, and a number of other economic factors at the time of sale. It's important to remember the inverse relationship between interest rates and treasury prices in the secondary market, or bond prices in general, especially in this current environment. When interest rates go up, the price of your existing T-bills, notes, and bonds will go down in the secondary market. Reason 4 for buying T-bills, notes, and bonds. They can be purchased to provide income at predetermined intervals. Treasury securities offer different maturities. T-bills are issued in maturities of 4-week, 8-week, 13-week, 26-week, and 52-week. So say that you have $20,000 in the bank earning you a little magically more than nothing these days. And you know that you'll need that money in 3 months for tuition or down payment on a home. You could have invested that cash into this 13-week T-bill here a few weeks earlier, which would have paid you an annualized return of 2.941%. Or say that you'll only need that money in 6 months. Then you could have bought this 26-week T-bill instead with an annualized return of 3.334%. And if you can tie your money up for even longer, Treasury notes offer maturities of 2, 3, 5, 7, and 10 year. And Treasury bonds offer maturities of 20-year and 30-year. In addition, interest on Treasury notes and bonds is paid out every 6 months. Interest on T-bills is paid at maturity because of their shorter terms of generally less than 1 year. I'll talk more about this in the next video section. Reason 5 for buying T-bills, notes, and bonds. They have high purchase limits. You can buy up to $10 million per auction by non-competitive bidding. Non-competitive bidding is how most normal investors like you and me purchase T-bills, notes, and bonds. I'll talk more about this later on as well when we go through how the Treasury auction process works, how the sales process works. The U.S. Treasury auctions or sells new issue T-bills weekly, with the exception of the 52-week T-bill, which is only offered monthly. New issue Treasury notes and bonds are also offered monthly. Here's the TreasuryDirect link to their tentative auction schedule for new issues, their sales schedule. And here's what will show up when you go to this link. The first 3 columns are the most important: the security type, announcement date, and auction date. Let's pretend that I want to buy a 4-week T-bill towards the end of September, after the Fed has their September 21st, 22nd meeting, and presumably announces another rate hike. If I scroll down this auction schedule, I'll find this 4-week T-bill under the security type column. And in the announcement date column to the right, it says September 27th, 2022, meaning this is the first day when I'll find this particular 4-week T-bill available for purchase in my brokerage account. In the auction date column, it says September 29th, 2022, meaning I have to place my purchase order with my bank or broker before this date. So basically, to buy this 4-week T-bill here, I'd have to place my order with Fidelity or Vanguard, Schwab, or E-Trade between September 27th, 2022 and the evening before September 29th, 2022. Do note that this announcement date, the September 27th, 2022 here, generally only applies to purchases via a bank or broker. If I wanted to buy the same 4-week T-bill via my TreasuryDirect account, it would already be available for purchase there right now, as you can see here. In fact, I can even buy 4-week T-bills now that are scheduled for auction at the end of October. These don't show up yet in my Fidelity account. But this only means that I can schedule or place my purchase order earlier via TreasuryDirect than I could via my Fidelity or other brokerage account. In the end, I'll still get the same price as someone who places their order later, which brings me to how the sales process, the auctioning process works. So going back to this example of the 4-week T-bill with an auction date of September 29th, 2022, here's what happens on the auction date for you and me, just like in the movies. I'm just kidding. It's nothing like that at all. We're placing what's called a non-competitive bid. It's the banks and other institutional buyers who will do the competitive bidding for us on the auction date. And whatever price yield that they end up getting on their tens of millions of dollars of Treasury securities we also get, regardless of how little or how much we buy. This link here will give you an idea of the rates for recent auctions. Here's what you'll see when you visit this announcement data and results page. And if you look at the most recent auction of 4-week T-bills, here's the highest rate that was offered, and here's the actual interest rate that was agreed upon in the end for those T-bills. Which brings us to a very important point regarding T-bills. Here's what I mean. Let's go back to this link here that shows the rates for the most recent auctions at the time of this taping. And again, let's look at the 4-week T-bill. I'm going to click on it. And this is a screen that shows up. If you look at the 4-week T-bill, the price that was paid per $100 purchase is $99.807889. This means that if you had placed a $100 order for this 4-week T-bill, regardless of whether that was via Treasury Direct, a bank, or a broker, you would have paid this $99.807889. When this 4-week T-bill matures, what you'll get back though is $100. The difference between the face value you get back at maturity, this $100, and your original investment, the original purchase price, this $99.807889, that's your total interest earned on this 4-week T-bill. This $0.19211, that's your interest. So to sum this concept up, the face value of your T-bill that you get back at maturity minus your original investment amount, the original purchase price of your T-bill, that's your total interest earned on your T-bill. And because I know we love numbers as much as we love tables on this channel, I'll walk you through the 3-step process on how this $0.192111 of interest earned on this 4-week T-bill translates into this annualized investment return of 2.509% from the announcement data and results page that I showed you earlier. Step 1, calculate the interest earned per day. Let's take the total interest earned on this 4-week T-bill, $0.192111. Again, that's the $100 face value of the 4-week T-bill that you get back at maturity minus the $99.807889 purchase price. Divide the total interest earned by the number of days that the T-bill will be held. That's 28 in this case for a 4-week T-bill. And you get the amount of interest earned per day for this 4-week T-bill. That's this number here. It's too long for me to even say. Step 2. Figure out the interest earned per year. So let's take the amount of interest earned per day number and multiply that by the number of days in a year. That's 365. And here's the amount of interest earned per year. Step 3, calculate the annualized return. Now take the amount of interest earned per year and divide it by the original purchase price of this 4-week T-bill. And that's your annualized return on your 4-week T-bill investment. The same as what we see here on Treasury Direct's table. There are quite a few reasons why Fidelity or Vanguard, Schwab, or E-Trade would be my preferred choice for buying new issue treasuries. Reason 1, it's just easier, especially if you already have an account at one of these places and don't have one with Treasury Direct. And even if you don't have an account at Fidelity, Vanguard, or the like, for the average investor, the process of setting up an account with one of these companies is generally simpler and more user-friendly than it is with Treasury Direct. Reason 2, you want to buy T-bills, notes, or bonds in your normal investment account or in a retirement account, the latter of which may be a nice incentive for folks who don't want to deal with tax issues until retirement. And if you buy it in a Roth, you don't have to deal with any tax issues at all. Reason 3, most brokerage companies like Fidelity, Schwab, Vanguard, and E-Trade do not charge any additional fees for buying new issue treasuries online. So you're getting your T-bills, notes, and bonds at the same price from them as you would from Treasury Direct. If you're using another brokerage company or you're planning to place your order via phone, be sure to check beforehand to see if you'll be charged any fees, because these fees will reduce your overall return on investment. Reason 4, you're typically not locked into this 45-day minimum holding period like you would be if you bought from Treasury Direct. For all practical purposes, once the trade is settled in your online brokerage account, you can turn around and just sell your treasuries whenever you need the money or for whatever other reason. Which brings me to reason 5. Redeeming your treasuries, selling them, is quicker and more hassle-free than with Treasury Direct. With my Fidelity account, I just click on the sell button. With Treasury Direct, I'd first have to transfer my T-bills, bonds, or notes to a bank, broker, or dealer. So basically, someone like a Fidelity. And according to Treasury Direct, here's the process that I'd have to follow. As an FYI, this form here has to be mailed in. And currently, anything sent by mail may take weeks or months to get processed. Okay, so let's get started with our step-by-step tutorial now on how to buy T-bills via Fidelity. And do keep in mind that with Fidelity and most brokerage companies, the minimum investment amount required for treasuries is typically $1,000. So first, I'll log into my Fidelity account. And then I'll go to News and Research up here. Then I'll select Fixed Income, Bonds, and CDs from the pull-down menu. And this is the page that will appear next on screen. I'll scroll down and click on New Issues. And down here is Treasuries. This 3 here means that there are currently 3 new Treasury issues on offer. I'll click on Treasuries and this expanded section will appear. Here, you see these 2 United States Treasury Bills 0 coupon items. Those are the T-bills. You can always double check by looking at the coupon frequency column to the right because it'll show a 0. Remember, the reason for the 0 coupon, the 0 interest, is because T-bills are issued at a discount when you buy them, as I explained earlier, and you get the interest payment when the T-bill matures in the form of the T-bill's face value that's above and beyond what you originally paid. Going back to our new issue treasury screen, I'm going to check the maturity date to see which T-bill I want to buy. I bought these T-bills some weeks ago. That's why you're seeing this 4-week T-bill here with a maturity date of August 2022. That's the one I ended up buying for the making of this video tutorial. I generally recommend clicking on the description and double checking that you're actually purchasing the right security. Now I'm going to click on Trade. And this is the screen that will appear next. I'll select the account that I want to purchase these securities in. Again, I'll confirm that this is indeed the security that I want to buy. Next, I'll enter the amount that I want to buy here. Remember that 1 T-bill equals $1,000 face value. Don't put in 1,000 here if you want to buy $1,000 of T-bills. If I put in 1,000 here, that means I'd be buying $1 million of T-bills, and I definitely couldn't afford that. So I'm just going to buy $1,000 of T-bills, and so I'll put a 1 here under quantity. Next to it, there's this auto roll option. When I click on auto roll, I'll have the option of yes or no. If I select yes, Fidelity will automatically reinvest the proceeds when my T-bill matures into another T-bill with the same maturity. So in my case, I purchased this 4-week T-bill in July with a maturity date of August 23rd, 2022. And I clicked on yes for auto roll. This means that when my 4-week T-bill matured at the end of August, Fidelity used those proceeds to automatically purchase another 4-week T-bill for me in my account. I didn't need to do anything. If I wanted more information, I'd just click here. I don't though. So I'll select yes for auto roll and I'll click on preview order. This auto roll agreement will now appear on screen. I'm going to read through it to make sure I understand everything and then click on I agree. The next screen will ask me to set up alerts because I'm setting up auto roll for the first time. This is so that Fidelity can send me important messages about auto roll, like when my security is about to mature and be reinvested. I'll make sure my contact information here is correct, check the box, and click on Complete Setup. What will show up now is the confirmation page that I've set up auto roll alerts for my account. I'll click on OK. And what I'll see next is this page showing the order that I'm about to place. I'll double check once again that everything is correct, in particular, the security I'm purchasing. And down below, the quantity. Remember, this one here refers to $1,000 face value of treasuries. I'm good to go, so I'll click on Place Order. And that's it. I'm done. Here's my confirmation page. On the day of the auction, once the competitive bidding is over and the price yield are set, I'll get a confirmation email from Fidelity showing the price I paid for my $1,000 of treasuries and how much interest I should expect to earn by the maturity date. Personally, I think there are only three main reasons why someone might want to buy T-bills, notes, or bonds from Treasury Direct instead of via their brokerage company. Reason one, you want to buy less than $1,000 of treasuries. With Treasury Direct, you can buy T-bills, bonds, and notes for as little as $100. Whereas with most brokerage companies, the minimum purchase amount is $1,000. Reason two, you want to schedule your purchases out in advance. As I mentioned earlier, in your Treasury Direct account, you'll be able to see new issue T-bills, notes, and bonds offered before the announcement date, before they're available with a bank or broker. I pulled these screenshots the same day from Fidelity and Treasury Direct. You can see that Fidelity only has 3 new issues on offer, whereas Treasury Direct has significantly more. Reason 3, you want your semi-annual interest payment to automatically go to a specific bank account. This applies more to Treasury bonds and notes, which pay interest semi-annually, not to T-bills. For example, maybe you want your semi-annual interest payments to go to a child or grandchild's tuition account, or to property taxes. With Treasury Direct, you can set things up so that the semi-annual interest payment from your Treasury bonds and notes go to one bank account, and the redemption value of your principal goes into a separate bank account. All right, let's hit this step-by-step Treasury Direct tutorial now. Go ahead and log into your Treasury Direct account. Here's my account summary page in Treasury Direct. I'll click on Buy Direct. On this Buy Direct screen that appears next, I'll select T-bills. You can also select notes or bonds if that's what you're interested in purchasing. The process moving forward is similar for T-bills, notes, and bonds. Now I'm going to scroll down and click Submit. On the next screen, I'll select the registration I want from the pull-down list. I'm just going to choose this one where I'm the owner and Marcus is the secondary owner. And I'm going to select this 4-week T-bill here, the same one that I used in the Fidelity tutorial earlier. You can see that I made my purchase in July from the dates here. Then I'll scroll down and enter the purchase amount of $100, which is the minimum purchase amount for a T-bill. And I'll choose the bank account that I'll fund this purchase from. This reinvestment here is the same as Fidelity's auto roll feature. Treasury Direct will automatically reinvest the proceeds when my T-bill matures into another T-bill with the same maturity. I'm going to enter 1 here for reinvestment just to test things out. But as you can see, Treasury Direct allows you to schedule reinvestment for up to 2 years. You can also select 0 for reinvestment if you wish. Now I'll select the payment destination for the last maturity payment, either my bank account or the 0% CFI that Treasury Direct offers. I've included the Treasury Direct link below on the 0% certificate of indebtedness in case you want to learn more about it. Now, if you're buying Treasury notes or bonds, you'll see 2 boxes under payment destination instead of 1, like this here. As I mentioned earlier, in this case, you can select a different bank account for your regular interest payments and your final maturity payment. I'm going to have my T-bill's last maturity payment deposited into my bank account. That's what I'll select, and then I'll click Submit. And here's my purchase review page. As always, I'll double check to ensure that everything is correct and read through everything here. Then I'll scroll down and click submit to place my order, or edit if I have to make changes. And here I have it, my purchase confirmation that I've just bought my T-bills via TreasuryDirect. Like with the $1,100 of tips we bought to make this video tutorial here on Treasury inflation protected securities for you, we also currently own only $1,100 of T-bills in our portfolio. The $1,000 I bought from Fidelity and the $100 I bought from TreasuryDirect for the purpose of making this video. It's not because I don't like T-bills, bonds, and notes. I do, especially new issue ones in this current environment of rising interest rates and market volatility. I'm just waiting for the Fed meeting at the end of September to see which maturities we'll be buying and how much. So as always, stay tuned. I'm already looking forward to making that video. And if you think T-bills, notes, and bonds are a good fit for you, I hope what we've gone through today has helped make your purchasing process just a little bit easier. If you enjoyed this video, don't forget that thumbs up, and see you again soon with another money-saving, wealth-building video.